Just one moment. Says we are streaming live now. I'm just going to wait till the feed shows up on my computer on my live stream for YouTube. Hi there, everybody. If you can go ahead and see me, I am just waiting to see a little update on my end. Says we are live on YouTube, but I cannot see the stream. Okay, everybody. So we're having a little bit of technical difficulty with the Zoom side. Let's go ahead and... All right, everybody, we're live. Hi, this is Ken with MinnoTank. I just want to give a quick update. So I'm looking at our YouTube right now. We're very excited that we have everyone here today. We want to thank each and every one of our investors for hopping on this call today. We are live right now. Just going to go ahead and do one last quick fix on our end so we can see. All right, looks like we're doing good. So again, hi, everyone. My name is Ken Barton, and I am the founder of MinnoTank. Let me be the first to welcome investors from all over the USA on today's call to see 6 amazing early-stage tech startups raising capital. MinnoTank is a platform to connect early-stage tech startups and investors through a live stream pitch. Twice a month, MinnoTank will host 6 startups pitching for 6 minutes. This is made possible by the investment of not only startups and investors, but also sponsorship by service providers. Are you a sponsor interested in reaching a larger audience of early-stage tech startups currently raising capital? Please go to MinnoTank.com and apply to sponsor after this pitch session. As for the structure and opportunity of MinnoTank, we utilize the Guy Kawasaki model for pitching. We have asked our startups, no matter the industry, to limit their investor deck presentation to 10 slides plus 1 contact slide. This keeps things efficient and keeps our rapid transitions easy to follow. We would like to welcome Al Zizi, founder of ZyQuest out of Green Bay, Wisconsin. Al is an angel investor and will act as our investor moderator today on our live stream pitch. After each 6-minute pitch, Al will have 2 minutes to ask questions about specifics that he and other investors would like to know about each company and their founding team. Al, I am unmuting you right now and giving you a video prompt. Great to see you. Al, I'm handing over the microphone to you. Would you mind giving us a 3-sentence introduction to who you are, as well as your investment thesis, please?
Okay. So I'm an IT-based or Green Bay-based IT developer, entrepreneur, and investor. The type of companies that I like to invest in, of course, are technology-based or technology-enabled that solve a big problem in an industry where the founder is a subject matter expert, or at least has great contacts with subject matter experts, and is somebody that I think can actually take that thesis and run with it and actually lead an organization.
Fantastic. That sounds awesome. You sound like a great investor for MinnoTank. So one highlight I want to go over in your investment into early stage tech companies is Lane Hub, which I happen to meet the founder of, and I happen to be in Wisconsin at the founder of the Rise of the Rest conference when Steve Case, the co-founder of AOL, also co-invested. So can you tell us a little bit about why you chose to invest in Lane Hub as an early stage tech startup?
So Lane Hub fit our model really well. It was at the ideation point. It was somebody that actually was one of our clients approached me and said, I have this idea. I'm already doing it. I just need to develop the technology. We sat down. We've kind of talked through the scenarios. It fits everything that I'm interested in. Very early stage. I love ideation stage. It needed capital. It needed, in our group, we have a lot of expertise in transportation. It just fit perfectly, and the solution has huge. It's going after a huge industry. So,
fantastic. Yep. And as I said to you before, I really hope we could host Lane Hub if they still have any room left for their investment. So I'll leave that to you and hope that we can bring Lane Hub on, because I know they just they got $100,000 from Steve Case, the co-founder of AOL, yep. And so they're doing great. But we'd love to help them finish out their deal with the MinnoTank Investor Network. So now, Al, I'm going to go ahead and shut off your video. I'm going to take back the screen and put you back on mute. And so I want to give everyone a little pitch of MinnoTank itself. So just so everyone can understand what the purpose of MinnoTank is. So I'm going to go ahead and share my screen with everyone. Fighting with technology. Okay, great. So there we are. Seems I have Al Zeis's picture in the corner. Let me see if I can change that right before I go into my own pitch. So MinnoTank, as you guys well know, is a startup. So it does seem like, okay, I'm looking at my screen. That seems like we're in good shape. Okay, so let me go ahead and back up one. So MinnoTank is a platform to connect early stage tech startups and investors through a live stream pitch. As you're seeing this right now, whether or not you believe it is, this is in fact very disruptive. Currently, and the problem that we're addressing, if you were to look at how, as a early stage startup, to contact and address people like Al Zeisi or other early stage tech investors, you're going to have to go through an extensive amount of travel expenses, and also you're going to have to prep your deck each and every time for that individual investor. MinnoTank is not saying that we're going to save all that time, but what we can do is allowing you to do a live stream pitch to an audience of hundreds of investors allows you now to get past that first date and get onto the second date. Meaning, oftentimes startups expend hundreds of hours per year just trying to get in front of investors who care about what they have to say. So with MinnoTank's live stream pitch network, we will give companies opportunities twice a month to reach hundreds of investors through a live stream pitch, just as you're going to see today. What is the underlying magic? And by the way, just to remind everyone, although MinnoTank is not raising money, we are using the Guy Kawasaki model, and we have more information about that on MinnoTank.com. So the underlying magic is my personal network and experience. So this is me, Ken. That's actually 19-year-old Ken. So I've worked at startups all over the world. I have 2 degrees in Mandarin. I spent an extensive amount of time at Merrill Lynch, and I had my own personal exit with Lead Liger when I was living in Berlin, Germany. That means I've had a lot of interaction with investors, especially angel investors. And oftentimes, over and over again, whether it's an angel investor or whether it's a financial advisor, my job is it has been in the past, to connect early stage tech startups with fabulous and fantastic scalable ideas to investors that might want to ride that wave and ride that dream with them. And that's what MinnoTank provides. We have a revenue model of threefold. So currently, each startup in front of you is paying to have access to reach out to investors. We believe that it's very important that startups are willing to pay to pitch, just because it's impossible or it's very difficult for us to grow our network and reach out to more potential investors without more capital to run through. Sponsorships are very important, and we're going to make a sponsor announcement in just a few minutes. So sponsorships of our channel are quite important to us. And then finally, PitchStream. And PitchStream, we're going to talk about some LOIs we currently have out right now. So MinnoTank not only is a network for investors, but we also have a large following of techies behind it. And you might know some of these brands, you might have seen them before, but oftentimes large companies these days are looking to do a thing called a reverse pitch. And what we're calling PitchStream is our solution for them. So let's say you are Kohl's, and Kohl's is a very large organization, several $billion in annual revenue, but you consistently, for the last decade, have still had 1, 2, 3 problems. Let's just say e-commerce tracking of returns. I happen to know a lot about retail because I have some good friends there. And you buy something online, you return it in the store, and that's a huge problem because that store looks like it's getting more returns than everyone else when it's not. So that might be a very simple problem to address that Kohl's can't internally figure out how to solve. But they might want to go out and pitch this problem, do a reverse pitch to a group of techies all over the USA, collect ideas and interest from them, see who can prepare in 60 days an MVP or have the best solution to their specific problem, or even fix one of their current problems. So maybe you're a small company, you already have 50 employees, you already have some clients, you already have some revenue, but what you want to do is you want to add on to what you're already doing and say, hey, we can fit Kohl's, and we can make them one of our clients. So then Kohl's will turn around with this reverse pitch and invest a small amount of money for a portion of equity in your company, but also become your client. And that's of high value because selling into a place like Kohl's or Harley-Davidson or BMO Harris opens you up to their entire industry, saying that you already have them as a client. That removes a very large barrier. So that's the PitchStream product that MinnoTank utilizes, and we expect to have our first reverse pitches in Q1 of next year. Hope you guys watch. MinnoTank is also a growth hacking organization. So we ask startups and investors to not only come and watch Minnow Tank and participate, but also invite other startups and investors onto the network. So for example, every startup here today, we've suggested and advised that they should be contacting all of their current investors in their network. We will never know your company as well as you currently do. So what we suggest is that you access all of your investors and bring them all on the call to remind them that you are going live and you are currently raising capital. Same thing with investors. Right now, we believe that investors work on a very third-degree platform. So when Sally sees a deal but doesn't fit with Sally, and Sally passes it to Nick, and then Nick says, it's not perfect for my investment thesis, they're a little too early stage, but I know who will love this, Teresa will. And she passes it to Teresa. That's currently a very connected network. What we prefer in the future is that you could direct these deals to Minnow Tank, giving them the ability to pitch a much larger audience of hundreds of investors, so the individual company is not dependent on investors making introductions on a one-off basis. This is our competitive analysis. Minnow Tank is not only paid data, so whenever we take data from startups or we're getting information from investors, we're asking everyone to pay on every side. Therefore, we're not on the crowdsource model, so you could often have missing data or misplaced data, as everyone knows about Crunchbase and AngelList, very two-dimensional platforms. But what's more important is that we're curated. So I myself have had an exit about 4 years ago, and I am a tech founder. And I personally, as Ken, rubber stamp every single company that comes through Minnow Tank. So it's extremely important that we keep our brand continuity together and we grow our mission in the fact that we want to be curated. We're not trying to bring you 5,000 opportunities per month. We'd much rather bring you a curated set of very few opportunities with great potential that we believe in ourselves. Minnow Tank also has a great mission. So I myself am an LGBT founder, and Minnow Tank shows preference to the following founder classes: LGBT founders, minority founders, and women founders. We believe it's very important that if an LGBT founder is going to be at the chokehold and at the control of this network, that we try to equalize as much as possible. And we're very excited to have a female founder on the call with us today. Management team. Currently, Minnow Tank is very small and scrappy. We've produced this show. We're very proud of what we're doing. But we will be acquiring a CTO, a CMO, and a COO next year. Our financial projections, currently between our LOIs, sponsorships, and revenue models, we are currently revenue positive with more than $10,000 in MRR every month. We are not currently seeking investment, but we are considering it in the beginning of Q1 of 2018. Currently, this is some of our major accomplishments. We have some sponsors. We have a great network of 182 updated as of today, investors, as well as startups paying to pitch on Minnow Tank's network. So without any further ado, I'd like to lead and say that I'd like to try to have, I cannot mess this up, I'd like to give Al unmuted and turn Al's video back on, which I feel like I have done both times correctly. Al, can you hear me?
I can.
Okay. Al, do you have any questions for me about Minnow Tank? This is the part where at Minnow Tank, you receive 2 minutes to be able to talk back and forth about the company. So are there any major questions I can answer for you about Minnow Tank?
So how are you spreading the word? How are people, as far as investors, right? It's one thing to go out and find startups, because startups, they're looking for any opportunity to raise money. How are you getting the investors interested?
Perfect question. So just like you were personally interested in doing an opportunity like this, Minnow Tank is consistently reaching out to investors. One of our biggest markets are whenever you look at large investment firms, oftentimes they'll have associates. So we'll have, an average VC firm might have between 5 and 25 associates constantly filling through deal flow. So those are some of the brands. If you go to MinnowTank.com right now, you can see some of the brands that are already subscribed to Minnow Tank. So as you can imagine, when you do a live YouTube performance, it's a little difficult to value who's watching because there's many channels you can watch through YouTube. But what we try to value ourselves around is subscriptions, and also subscriptions to our mail as well as our website. So we are constantly reaching out on an individual basis, and we're so excited to have this show finally finished, because then we'll cut up the show and send it to interested parties and use our content to grab more investor attention for the future.
Are you actually getting a carry or getting a piece of any of the companies you're representing, or is that?
Great question. Mm-hmm. So Minnow Tank is not participating in any of these deals, and that's something that should be heard and said, especially because I happen to have my Series 7 license and I don't want to go to prison. So we do We actually asked the startups to pay a $500 fee because number one, they're invested. It enables us to actually get the word out further, but we do not participate in any of these deals. So whenever an investor is interested in working with a company, let's say Count.it, Oliver today, let's say he pitches and you say, I would love to speak to that guy. We like it when they leave their contact slide up as long as possible. So you'll have the ability to send them an email and say, okay, I'm very interested in reaching out to you and getting to that second date discussion.
So what's that next stage for you then? If you're going to do 6 pitches twice a month, right? How do you grow the organization, or are you going to just, what's your plan?
I'll give you our quick trinity and give it to everyone who's listening on YouTube and anyone who wants to participate in the future. So right now, Minnow Tank is 1/3 of our trinity, and this is going to be the last question that I answer, so I can go ahead and pass it off to our next person. And I'm going ahead and stop screen sharing so I can make this seamless. But my answer to you is, the show is 1/3 of MinnoTank's revenue model. I also mentioned that we do have LOIs out with several large Fortune 5000 corporations. We're looking to do reverse pitches. And what we would love to see is that large corporations come to MinnoTank to pitch live and reach out to not only our investors, but our entrepreneurs to solve problems and then fund companies from there. But finally, the third part of our trilogy, which is most exciting to me, is working with incubators, accelerators, and universities. Organizations that are already charged with the responsibility to bring in investors on a regular basis to come see early stage tech companies. So the beautiful thing about MinnoTank is we're the only network that's going to be scalable and going to have unlimited scale whenever it's coming to investors. So, give me 2 years and we'll have thousands of investors. We'll have all the major VCs and channels on, and we would love to be going out individually and live streaming in a physical location, going to places like 1871 or in your neck of the woods, Al Generator, places like that. They're looking to have their pitches live streamed to a larger investor audience.
Very good.
Okay. All right. Thank you so much, Al, for that little bit of back and forth. I'm going to go ahead and mute you and shut off your video again. For the audience out there, I'm just walking myself through this verbally, so I can't personally mess it up. So let me keep to my script. So thank you very much for taking the time to listen to my pitch. Before we get started with our other awesome tech companies pitching on MinnoTank, I want to thank our sponsors, Bradford Allen and DoubleTake Promotional Marketing Materials. First, Bradford Allen is a commercial real estate firm that specializes in finding office space and negotiating tenant-oriented leases for startups and large companies too. Bradford Allen will help a client quickly and efficiently find the right office space for their needs, saving the client time and money. The best part, this is done at no cost to the client because all fees are paid to Bradford Allen by the landlord after a lease is signed. Thank you for continual support, Bradford Allen. And if you are looking to get in contact with the team, there is a link if you go to MinnoTank.com and click sponsor. Next, I want to thank DoubleTake Promotional Marketing, our swag sponsor. DoubleTake can help with all your promotional products and branded merchandise needs. The owner, Matt Deutschman, is a 4th generation in his family in the promotional marketing industry, understands the value of your company's time. Therefore, when working with DoubleTake Promotional Marketing, you receive a white glove approach to your continual need for promotional marketing materials to maximize the impact of your brand. Thank you, DoubleTake, for your continual support to MinnoTank. Now, without any further ado, I am going to go ahead and ask Miss Sarah Perkins to turn on her video, unmute, and take away the show. Sarah?
All right, thank you so much, Ken. Let me share my screen. All right, hello everyone. I'm Sarah Perkins and I'm the CEO and co-founder of Designer Share, the first truly peer-to-peer marketplace for women to rent their designer clothing and accessories to one another. I think we can all agree few things feel better than putting on that perfect outfit. You stand a little taller and feel like you can take on anything. But for women, this feeling comes at a higher cost than for men. We can't get away with wearing the same suit all the time and have to be constantly changing up our wardrobes. God forbid you wear the same outfit on Instagram more than once. To give an example of this, the typical black tie gala outfit can cost almost $9,000 if you want to be wearing high quality pieces. With a platform like Designer Share, you're able to rent this at a fraction of the cost. Let's take a look at our market. According to Brookings Institute, by 2025, the sharing economy is going to be worth $335 billion. What Tech claims that by 2023, online clothing rentals will be at $1.9 billion. About 90% of that will be completely peer-to-peer, which means we get to take on a $1.7 billion market. Why are we so special? It's all about the community we've built. Instead of having a corporate face behind this, owning all of the pieces, our items on the site are truly coming from women here in Chicago to start with, and they're able to share them with our renters. Women naturally bond over sharing clothing, so this is a feeling that they've already experienced before. But this time, they get to be entrepreneurs from their own closets, holding on to 75% of the price that they set per week. Our renters are those who are looking to further themselves socially and professionally, but don't have the means to be buying high quality brands. This way, they're able to wear designer on a discount and feel confident from the inside out, ultimately leading to major happiness for everyone. Our model is based on taking 25% of the price that our lenders set per week. We suggest that this is about 10% of original retail value. So for example, a dress that was worth $450 originally would be about $45 for a weekly rental. Renters are able to rent from 1 week all the way up through 5 weeks, giving them the chance to try these pieces out more than once. Our lender protection fee acts as a form of insurance to cover any sort of human errors that might happen. When we don't experience loss, this $5 on every transaction is a revenue stream for us. We have a very low cost of goods sold as we don't hold on to any of these pieces in-house, and we don't dry clean them in-house. We have our dry cleaning partner, which is Procter & Gamble's Tide Spin. We have a gross margin of 65% as a result of this. Our marketing strategy is in 3 parts at the moment. So currently, since we launched 7 months ago here in the Chicagoland area, we are creating brand awareness so that we can get as many women signed up on the site as possible. From there, we'll be targeting our signed up users through email campaigns, social media campaigns to remind them about Designer Share and educate them to our process as to why they should be using us versus buying fast fashion or going to a consignment store with their items. On top of that, we'll be creating richer network density by getting our referral program out there. We already have the referral code system built, and this way we'll be able to get these women's friends on board. Even though we're currently serving only a 35-mile radius with free door-to-door delivery, we are working on the logistics for our national shipping program so that we can open up the Chicago closets beyond. I think some of you have probably heard of a little company called Rent the Runway, which has clearly paved the way for women's clothing rentals. Unfortunately, they're a typical pipeline and a very high-cost business model. And also, they are completely corporate face, so you don't have this opportunity to be able to connect with other women. We do have a small set of competitors out of New York, but they haven't been able to go beyond the city. They tend to do a bit of a hybrid by housing some of the pieces in-house and dry cleaning them. And they don't take the same steps that we do by offering free door-to-door delivery and by splitting the cost of dry cleaning between our users. Our team consists of myself, Sarah, as the CEO. I was a former lifestyle editor and journalist and have always loved fashion. I have my marketing degree from Santa Clara University. My co-founder is Bill Meyer, and he's our chairman as well. He was a corporate litigator for 20 years and is currently getting his MBA at University of Chicago's Booth School of Business. We were family friends and came together on this idea 2 years ago. And then we have our community manager, Danielle Wink, and she has a wonderful background in fashion PR. Together with our small team of part-time interns, we are able to push the Designer Share word out. Looking at the next few years, we plan on having 2,000 transactions by the end of our first fiscal year, which will be April 1st of 2018. Going from there, we estimated our projections based on a typical platform marketplace and also based on Rent the Runway's first few years. As I mentioned before, Tide Spin is our dry cleaning partner, making it very simple for our users to keep their items in good condition. And Lyft is our delivery partner here in the Chicagoland area. We've also had really amazing press in the Chicago Tribune, on WGN, Chicago Inno, and Chicago Woman. We're also starting to work with Shoe Drop, which will help take care of any sort of leather goods such as shoes and handbags. I want to thank you all for listening today. We are currently raising a round of $350,000. $100,000 of that has been committed already. We are closing the round at the end of this year. So it is time for you to join the DS domination, and I can't wait to talk to Al Zeisy further. Thank you so much.
Thank you very much, Sarah. This is Ken again. I'm going to go ahead and give Al Zeisy control of video and turn him off. Al, can you hear us?
I can.
Okay, great. All right, Al, I'll turn myself off and let you go ahead.
So I'm assuming you're transactional fee based, right? Correct?
Yeah.
So what are you charging per transaction?
We take 25% of the price set by our lenders.
Okay. So are you responsible for any damage, or who's actually responsible for the damage of any garments or any of the accessories?
So with that $5 lender protection fee, we're able to cover small damages such as rips or a stain through Tide Spin. And beyond that, in our terms of service, we do state that our renters are the ones that are responsible for the full retail cost of an item. However, if there is ultimate loss, our company will self-insure up to $10,000.
Okay, so you control the entire financial transaction, correct? It's all done just like the Uber model. It's all done on your platform.
Exactly. Yes, we use Braintree as our payment processor.
Very good. Nice job.
Thank you.
Okay, sounds great. Al, thank you so much. I'm going to go ahead and shut off your video. Sarah, if you also wouldn't mind going ahead and shutting off your video and muting everyone once more. So next we have Charles and Tim Bradford from WitFoo Security. I am making sure we have everyone on video. We should have Tim and Charles. Charles, great. We have you. Tim, we have you. Okay. All right. Go ahead and take away the show, guys. Thank you.
All right. Thanks, Ken. WitFoo is built by veterans of the military, law enforcement, and cybersecurity to deliver a comprehensive platform for sustaining success in cybersecurity operations.
Cybersecurity breaches have become a staple in mainstream news. The regular failures we are seeing are not because security attacks are not being detected. In fact, virtually every attack, including these on the screen, were detected by security tools. The problem is those alarms are buried in a haystack of thousands of irrelevant alarms and exasperated by the complexity and number of tools creating them. With the help of Fortune 500 companies, higher education, mid-market organizations, and representatives from physical law enforcement, we have combined the best practices of cybersecurity with the time-tested approaches in law enforcement to make triage a failure of the past.
WitFoo Precinct reduces the total amount of time and labor spent performing investigations by more than 90%, which means that alerts and alarms no longer have to be triaged. Every single event within a security architecture can be investigated every single day. And while the work is being performed, the system is organically producing business metrics on the efficiencies of the people doing the work, as well as the tools that are in play and how they're contributing to the effectiveness or shortcomings of the security practice.
Temporal link analysis and modeling human thought and suspicion are at the heart of WitFoo Precinct. Temporal link analysis builds meaningful graph relationships to model the modus operandi of attackers. It combines and standardizes diverse data into a single investigatable unit called an incident. These incidents increase clarity and reduce the unit of investigation. Instead of parsing through thousands of alarm rows, organizations investigate a multidimensional picture that tells a story which significantly reduces the time per investigation. This approach leverages the best capabilities of both the human investigator and their digital tools. Because of the systemic failure and pain that WitFoo was founded to correct, global spending on cybersecurity will exceed $120 billion in 2017.
Our customer-centric go-to-market strategy begins with providing the end users with everything they need to sell the value of WitFoo up the corporate chain of command. Our pricing model is very simple, it's cost contained, and it aligns with metrics that any CFO can approve. Through our online community, free trials of WitFoo are available for download. Online pricing calculators are also available. So Prospective customers can visit our site, they can self-generate their own quotes, they can download, deploy, and evaluate WitFoo in less than an hour and begin producing metrics that justify an investment in our technologies. To achieve massive scale in terms of sales and support, we employ a 100% channel sales model. We recruit and train certified WitFoo reseller partners to help us identify, close, and support new customers. Our partner program is designed to meet every need that a partner could potentially have in selling our technology, and that's all facilitated through our next generation partner portal. To get our message out to our target audience, we produce educational cybersecurity seminars that are delivered both online and through our certified partners, as well as speaking at local, regional, and national security events. Combining these activities maximizes our ability to scale and keeps our marketing costs extremely low.
WitFoo levels up security by attacking on 3 different evolutionary tiers. Legacy security event management tools called SIEMs have been around since 2000, but are costly and fail to deliver the value expected by organizations. WitFoo can leverage or replace these tools at a fraction of the price while delivering instant value without the extreme complexity. The same can be said of the myriad of analytics and automation tools entering the market. By empowering and learning from our users, WitFoo provides a simpler yet more effective interface at a fraction of the investment. WitFoo is the first to market to provide detailed business metrics that allow for transformational conversations with the broader business. These features combined deliver the first platform to handle all aspects of cybersecurity operations at one remarkable price. In addition to Tim and myself, we are joined by Captain Reese Omar of the U.S. Navy with years of experience as an information security officer, and Detective Bill Rich of LAPD's Major Crimes Unit. Our advisory board consists of chief security officers from the Fortune 500, leading universities, as well as thought leaders from Dell and InfoWorld magazine.
Utilizing our growing channel program and our go-to-market strategy, we expect to grow to our business from a $5 million valuation in 2017 to a $250 million valuation exiting 2020. By the end of 2018, we expect to grow our customer base to 10 with $2.5 million in bookings and $1 million in annual recurring revenues. Year to date in 2017, we've closed $282,000 in revenue across 2 different customers, and we're actively working on more than $5 million in sales opportunities, including 10 active trials of our technologies spanning mid-market to Fortune 500 companies and covering verticals from manufacturing to healthcare to financial services. We have 2 national resellers that are representing us, and they are supported by a global distributor, which further accelerates our growth while minimizing risk in our overall cost of sales. Our traction to date has proven the value of our product, our messaging, and our go-to-market strategy. We're extremely excited about the future and to watch our traction grow in 2018 and beyond.
You can learn more about our business at our Start Engine campaign or at www.witfoo.com. Back to you, Ken.
Okay, guys, thank you very much for that seamless handoff. I'm going to go ahead and ask Al Zaizi to hop right back on, and so he can kind of lead us to the next part of the conversation. Al, do you want to take it away?
Yes, the threats are ever growing and changing. How do you stay up with, because technology is also constantly changing at a speed that we can't even imagine at this point. How are you going to keep up with all that to make sure that you're staying ahead of the threats?
That's a great question. So fundamentally, the way that law enforcement, physical law enforcement handles security is something that we've learned a lot from. And so we've broken the different components of the way attackers attack, and we've standardized that taxonomy. And then we work with other vendors in the space, whether they're working on endpoints or firewalls or the other technologies, to teach the collective knowledge from those tools to our tools. So it standardizes and normalizes the information from those diverse and emerging technologies. So WitFoo Precinct isn't generating any net new alarms. We're understanding and processing the alarms being generated by other security vendors in a way that the end user, the investigator, can understand.
Okay, so how are you actually priced? Are you priced by the larger the client, the more you actually are charging. So is it a seat license? Is it a
Yeah.
transactional thing?
Yeah, we price by endpoint. What you just alluded to, the bigger the company, the bigger price. That's a very vendor-centric model. We're more customer-centric, and we like to offer a license that is somewhat containable. So we base our licensing on the number of endpoints or the IP addresses that we're reporting off of. A CFO can actually contain that number or dictate that number versus charging based on the amount of data that we're consuming or the events per second that are coming into our system. It's an OpEx license, so it's an annual subscription. The longer term you buy, the cheaper it becomes, and the more endpoints you have, typical economies of scale that go with software apply.
Okay. Who on your team actually understands the channel network? Because obviously to be successful, you really have to build a strong channel network.
Yeah, Charles and I both have a lot of experience both in building channels and supporting channels and seeing how channel programs fail. We've built ours kind of on anti-patterns. One of the things we do and employ is simple haggle-free pricing. And, partially that's to protect the reseller's margin. Our resellers are very coin operated, right? They get paid on gross profit or gross margin. So we want to protect that and avoid the never-ending dilemma out there with high volume, low margin resellers coming in when procurement shops it around and just winning the deal on the lowest price. So the no haggle pricing, the theory is no matter where you go to find a price quote on WitFoo, it's always going to be the same. Our pricing is public facing. Any customer out there can self-generate their own quote off of our website, and wherever they shop it, that price should be matched.
Yeah, and just one last thing to add to that. When we were building the company in the early days, we spent a lot of time interviewing prospective security partners and what is it that they look at in a partner channel that works. And the three things that came back were margin, ease of sell, and credibility. We need to make them look good because they have to stay in that account. So we've built a product and we've built a channel program that's tailored to those needs.
Very good. Thank you.
Okay, gentlemen, this is Ken Barton again. So I'm going to go ahead and ask all of you to stop your videos and mute everyone once more. And I'm going to hand it over to Leaf. Leaf he's got his video up. He is the founder of Frey for Men, and I'll let him take it away.
Hey everyone. So again, thank you very much, Ken. My name is Leaf. I'm the founder of Frey, a direct-to-consumer line of clothing care products tailored towards men. So I'm sure most of you have noticed, but the men's industries as a whole have absolutely exploded onto the global marketplace. As a demographic, men are just spending more and more time, attention, and money on the details surrounding their scent, their grooming habits, their appearance, and particularly their clothing. The men's clothing industry is absolutely booming. It's outgrown the women's wear industry for the last 5 years and is projected to continue to do so. Men's clothing, higher-end men's clothing has outgrown women's wear as well at a rate of 14% over the last few years. With this, men are actually doing more laundry. We see a 23% increase in the number of men doing laundry just since 2013. However,
sorry to stop you real quick. You're not sharing your screen and you're not showing any of your... Yep. So I'm sure you want me to stop you for that.
Jumped the gun there a little bit. I appreciate you.
That's perfectly fine. I just want to make sure this presentation's worth it for you too.
Okay, absolutely. So let's go ahead.
Okay. So we don't know what we've already missed. So you can go ahead and probably start over. Thank you.
Okay, sure. All right. Well, sorry about that, guys. A little hiccup. But again, Leaf, it's a men's line direct-to-consumer clothing care. So as I mentioned before, men's clothing, men as a whole are paying more and more attention to the details surrounding their scent, their appearance, their fragrance, and again, their clothing. The menswear industry as a whole has absolutely been booming. It's at a $402 billion valuation globally. This has outgrown women's wear for the last 5 years and is projected to continue to do so. And again, as I just touched on, men are doing more and more laundry. Yet, despite these two massive emerging trends, the existing laundry and clothing care markets are totally missing this demographic. Most products are still tailored towards women using outdated formulations and oversized, brightly colored jugs. And also the two giants in the industry that have been running business the last many decades have been doing business the exact same way for years. And that's in supermarkets, not this direct-to-consumer tech-enabled platform. So again, just a few examples of very much the advertisements tailored towards a specific segment of the market, missing single men. And this is us. This is Frey Clothing Care. Again, a direct-to-consumer elevated clothing care line, blending this emerging trend in menswear and men doing more laundry with this outdated market. Again, we are a tech-enabled platform, which has allowed us to grow and pivot much more quickly than any of the existing brands. We are bringing fashion to an industry that has not really seen it before. 65% of our customers are more excited to do laundry, which we feel is a huge statement to what we're bringing to the market. Again, we're improving on existing products, including the formulations, the bottle designs, our various value propositions, and again, capturing this massive shift in male consumer behavior. So just a little bit about our previous traction. We have not raised money to this point, so all of this is on a marketing budget of less than $60,000. We've seen 25% month-over-month growth for the last 5 months. We broke 23,000 for October. We're projected to do 30,000 for November. Our margins after our most recent PO will be at 60% post-shipping, around 80% pre-shipping. This is one of the highest in the industry. Procter & Gamble sits at around 50% gross margins. We've sold over 20,000 products and washed over an estimated 1 million garments. On top of this, we've also been recognized by some of the world's leading publications, including GQ. We are partnered with Saks Fifth Avenue. We're actually being sold in their online store. So again, a huge testament to what we're bringing to the industry. Saks Fifth Avenue would never normally sell laundry detergent. We partner with Paramount Pictures. We've been on Good Morning America, the BBC News, ABC, and a number of other publications. Our metrics are incredibly fantastic. So we're really excited about this, again, especially now that our margins have hit 60%. With our blended customer acquisition costs, we're making money on the first purchase. Clearly, this is massive potential where theoretically, if you give us $100,000 in marketing, we're immediately turning a profit on that. Again, our product is differentiated in the fact that we are first to market. We are incorporating a much classier fragrance. We've worked with the top fragrance houses in the world to create a cologne-inspired fragrance. We've improved on the formulations. We also are B Corp certified, again, something that our customers attest to and willing to purchase for. However, our higher competitive edge is not what we've done to the products, but again, the fact that we're a tech-enabled platform. We're bringing a subscription direct-to-consumer model to an industry that's never experienced that. With this, we own our entire customer experience as well as all of our customer data. This has been fantastically useful for pivot after pivot after pivot, where we can improve with every single purchase order. The reason why companies like Dollar Shave Club and Harry's are able to beat Gillette is that they own the consumer data. So on every purchase order, they're reiterating a tiny bit to make a better product. And we're following that business model. Speaking of Dollar Shave Club, we're actually in talks with Unilever. We've spoken with them, we've spoken with them over half a dozen times. We have an NDA in place. We've spoken to their venture capital arm. I want to be clear, there's no near partnership. But again, to have a massive corporation reach out to us and give us guidelines and milestones to work towards is a huge testament to what we're doing in the industry. Just a little bit more about our marketing spend. Again, our metrics are fantastic. Over the course of our lifetime, we're averaging close to a 5-to-1 revenue versus marketing dollars. We're doing this primarily through digital ads, but also through partnerships with brands such as Esquire, Cool Material, and Thrillist. So over the month of November, we're partnering with those 3 brands that I just mentioned to collect over 150,000 emails within our target demographic. We're sitting at a list size of about 40,000 right now. So that gives you an idea of how big, how much we're escalating our marketing as well as our traction. Again, a few projections. The thing about our projections is that we have almost 2 years of sales history. So unlike some startups where you're just connecting 2 dots and telling an investor that, hey, we're going to hit 5 million in the next 6 months, this is based on very accurate data and what we hope are conservative projections. It has us hitting over 5 million for 2019 with a run rate of over 5 million by the middle of 2019. A little bit more about our team. So I co-founded this with my brother. I graduated Georgetown University with a degree in economics, mathematics, and business administration minors. Worked as an independent e-commerce consultant right out of school. So that gave me a lot of material and experience to build what we're doing today. My brother was a neuroscience and pre-med major at Dartmouth. So he's handled the chemistry side of all of this, working with our head of research and development, as well as the others to create these products. And our team of experts to support our supply chain have been absolutely fantastic, where any experience or knowledge that we may lack, they've been able to more than compensate for. So again, just touching on a few of the points that I just went over again, we're projected to do over 5.5 million. That's based on very strong, very strong numbers in terms of our return on marketing, our margins, and we've already been recognized by some of the world's leading publications and brands. So we're excited about what's to come. I appreciate you listening, and Al, I'm looking forward to what you have for me.
So what's the frequency of purchase you're finding with the average customer, and how much are they spending in each purchase?
Average basket is at 37 right now. That will be around 42 in 4 weeks' time. We're launching a fabric softener. Average frequency sits between 2 and 2.5 months.
So is it an automatic reorder, or do they have to actually reorder?
It's both. So following again the Harry's footsteps model, where you can both sign up for a subscription, which we clearly push most of our customers towards with various discounts and free shipping, or you can do one-off purchases. And we've actually, again, one of the numbers I kind of skipped over is that we have a 55% customer repurchase rate for first purchasers. And then once they've purchased the second time, that jumps to over 70%. So again, strong retention rates here, coupled with the fact that we're making money on our first order.
So 2 more quick questions.
Please.
So that you show a significant increase sometime mid next year. What's the impetus of that? Why all of a sudden are you going to increase that great?
In terms of our revenue?
Your projection, yeah.
Right. Yep. So we're raising money right now. Up until this point, we've been running it as a business where money from October, the profit from October goes into our marketing budget for November, which means that it's been a slow snowball. We're raising money right now. We have a soft commitment from 3 different angels and an angel group already. Most of our raise will go straight towards marketing because, again, we're making enough money where we can basically handle the purchase orders on our own.
So your production and then logistical network is going to be able to support that?
Absolutely. No, the experts that we're working with handle hundreds of thousands of units a month. So we'll be absolutely fine.
Very good. Nice job.
Thank you very much, Al.
Leaf, this is Ken. Would you go ahead and underline us your current deal for the investors out there who are listening? So what have you raised? What are you looking to raise?
So still looking for a lead investor. It will be convertible note. We're looking at $750,000. Working on those terms, again, based on the lead investor. Have a soft commitment of around $200,000 already. Again, just waiting for a lead to come in. We have phone calls lined up the next 2 weeks with all potentials.
Okay. All right. Sounds great.
Thank you very much.
Thank you very much, Leaf. So I'm going to go ahead and turn off your video now. And the next one we have coming up is Oliver Ryan with Count.it. So Oliver, I am turning you on right now. You should be unmuted. Can you hear me, sir?
Yes, I can.
Okay, great. All right, Oliver, please go ahead and take it over.
Okay. Hi, everyone. Oliver Ryan. I am the founder and CEO of Count.it, and hopefully you can now see my screen. And this is a bit of a spoiler alert. What Count.it does is we're using fitness trackers, Fitbits, Garmin's, Misfits, and Apple Watches, as well as apps on phones to power a growing network of both corporate and community wellness challenges. So we just had our best month on record. We're now averaging about 6 new groups a day. October was better than September. September was better than August. So who are these people who are signing up, and what do we do? And let me just flip to there. So wellness in the United States is an $8 billion business growing at about 8% per year. That's $640 million of new revenue each year through 2021. Many of you, I'm sure, out there are familiar with the basic issue, which is that the US healthcare is a $2.7 trillion market, and 86% of that is related to chronic preventable conditions. So all businesses in the United States are struggling with their health insurance bills, and they're also struggling with just corporate culture. Companies want to do stuff that keep their employees happy and engaged at work, and they'd like that also to be healthy. It turns out that at the enterprise level, very large American companies are doing a lot of stuff, but in the small business market, it's a huge problem, because what you see is HR managers, and we've talked to hundreds of them, are literally pulling out their hair. This is a direct quote. We want to do wellness, but it's a headache. After payroll and insurance benefits and recruiting, what is left over is, how do we do something fun for the office that's healthy? Now, there are a couple of big trends that are happening that are arriving to make this job a lot easier, and Count.it is benefiting from those. So specifically, last year was the single biggest year on record for HR tech investing. So HR managers at companies of all sizes are now getting used to having web-based tools to manage their staff and their employees. That's the SaaS business model, and it's hitting small businesses in a big way. Last year, 402 deals, $2.2 billion of investment. Secondly, I think everyone's aware that there's trackers, wearables is booming. It's a $17 billion market. 1 in 6 people now have actual wearables. And that's not to say anything of the fact that everyone who's carrying a smartphone now has a pedometer and a sensor built in, delivering information about their physical activity. Finally, there's a third trend, which is a big deal. It's group messaging, products like Slack, HipChat, soon Google Hangouts. So what's happening is there's now a physical infrastructure to deliver programming around culture and wellness to small businesses. And that is, in fact, what Count.it is. So on Count.it, everybody gets connected. We're an open platform. We work with all of the top devices, Fitbit, Garmin, Apple Watch, et cetera, as well as apps. People can instantly see how active they are, should they choose to, relative to their coworkers in social challenges. And we make it point and click easy for bosses and HR managers to deliver incentives and rewards. So if you're sufficiently active in a given month, you can get a $20 Amazon gift card. We, in fact, automate Amazon, Chipotle, Fandango, Lululemon, Whole Foods Market, Target, and a variety of other national vendors. So we're essentially delivering a wellness, a tracker-driven, an Internet of Things tracker-driven wellness product to 300, 400, 500-person firms. And that's why every day 6 companies are signing up on the site or calling us asking for a demo. And I'm going to talk a little bit more about who they are. But just to emphasize a few things, we're open to multiple kinds of devices, we're highly social, and we're networked. So we're doing something that doesn't even exist at the enterprise level, and that's we're allowing companies to see how active they are versus other companies. You can actually, on Count.it, battle. Company A can battle another company. They can see how they're standing in their metro area. And in general, we're now giving companies data to see what their health, what the state of their health is relative to all other companies in their class, which is, I think, a big deal, because if you can't measure it, you can't manage it. So finally, how much does this cost? We're making it affordable for even the smallest groups, $2 per user per month. This is in a market where your typical company is paying anywhere from $500 to $1,000 for health insurance. This is a rounding error. A lot of research suggests that even in the SMB market, companies are willing to pay upwards of $30 per user per month. So we are pricing this to move, because we see a huge opportunity in every company in America running a Count.it challenge. Once more and more companies do, the capacity for network challenges and league challenges becomes really interesting. We already have a bunch of paying customers, so we're actually upwards now pushing 50 paying customers. We have all the Hyatt hotels in the San Francisco Bay Area. We signed our first police department, Bend, Oregon. We have our first New York City public school, and a variety of others. What distinguishes our customers right now, although I think there's some very interesting verticals, but what distinguishes them are that their size, typically less than 1,000, and their very strong interest in their culture. So we're getting people who are leaning forward into culture, looking to do interesting things and use technology to do it. Now, it is a hard problem to attack this market, 500,000 small businesses with less than 1,000 employees. We are not doing it alone. So we get people coming to us directly. We have actually formed a partnership with Garmin. Garmin chose us to be their preferred vendor for SMB wellness challenges in the US. We have a similar partnership with Fossil, the largest watchmaker in the US that owns Misfit. And we have 3 private label wellness vendors. So those of you who know this market know that wellness is typically sold through the insurance broker channel. We have 3 companies private labeling the Count.it platform. How big can this get? Well, it's an $8 billion market altogether today, growing 8%. We think SMB market will get to be $8 billion on its own. And we think the just tracker-driven challenges are a $1 billion market in the next 5 years. And just to give you some sense of our financials before I go on to the team, we break even at 700 clients. We already have 50. That's $1 million in revenue per year. And with just 5% of the market, we're at a $30 million revenue business, and it goes up from there. So I think we have a great team to pull this off. It's not our first rodeo. I founded a company called Apartment Therapy Media some time ago with my brother. That's now one of the top lifestyle media companies in the country. We do about 30 million unique visitors a year. We employ about 100 people. I have nothing to do with the operations anymore, although I was the co-founder and I'm the second largest owner. I have a degree from the Harvard Business School and also from the Columbia School of Journalism. I spent some time as a tech journalist. So I'm really the business and product guy. My partner, Craig Beneroff, is our CTO. He's a fantastic full stack engineer, CS degree from the University of Michigan. And we're at it every day. And we have a team right now of freelancers helping us. So we're an extremely lean group. And so that's why we're raising money. We're looking for a 500,000. It's our first raise. It's a seed round, 500,000 convertible note. We have about 20 of that firm commitments, and we're in very late stage discussions with a venture capitalist to be our lead investor. And we really welcome, and we're delighted to be here. Thanks, Ken, and welcome your interest.
Before I let you go, Al Zeisy, would you mind turning on your video? I just want to make sure we get to capture your face because this is a video pitch. And Al, can you hear me okay?
I can.
All right. Go ahead, Al. Thank you very much, Oliver, and thank you for the shout out.
Okay, so ultimately health and well-being, even though it benefits the employee, it's usually about trying to get our insurance rates down, right, as a company. So are you tying results to HRA results, so the health and assessment results?
Yeah, so the short answer is no, and it's not something that our clients have asked for. So I think the question is, okay, if we run this program, is there a direct correlation to a reduction in healthcare costs? And this gets a little complex. But what we have found, your typical boss and HR manager at a small business, 300, 400, 500 people, if they see that their people are having a fantastic time and being healthy and using the program, which is in fact what occurs, they're delighted to pay $2 per user per month. And they're also, two things can happen. Number one, they can negotiate for discounts on their health insurance just because they're running the program. So just because they're running the program, they get a discount. Actual health outcomes occur over a longer period of time. People like lower percentage of heart attacks, decrease in diabetes. These things are long-term trends. And, given churn and employees, we don't go in and say, listen, we commit to you that in year 3, you'll have a 20% reduction in your healthcare costs, because frankly, that's just not something that can be done, or at least it hasn't been done yet. But we actually haven't found that people are asking for that.
Okay, great answer. What are you using as your distribution network? Is it going to be the brokers? Is it going to be organizations, associations of HR professionals? What are you using?
So two different sort of two go-to-market approaches. I just want to emphasize, yours assumes that all would be through partners. Half are through partners for us. I just want to give a quick lip service, or not lip service, but actual. We do have direct inbound sales, and I think it's a really big deal. I use about a dozen web-based tools to run my business. I've never talked to a salesperson, and I found them all online, Googling, what's the best CRM, what's the best customer service platform. And we want to get those. We want to be at the top of the Google search results for wellness and wellness challenges. And we're on our way to being there. Secondly, because that's not sufficient, as I said, we have distribution partnerships with the device makers, for example, Garmin and Fossil, and through wellness vendors. So, and in fact, through insurance companies too. So we work with Cigna. We work with, there's a company in Chicago called Push for Wellness that we're working with that private labels our platform. We have a company in England that's private labeling it to business parks in England. So we're sort of open and flexible. If you want to use our platform, you can put your brand on it and sell it to that market. We basically wholesale it.
Very good.
Okay, gentlemen, thank you very much for that. I'm going to go ahead and remute you both.
Thanks so much.
Thank you, Oliver. Thank you very much. So let's hop on to our next pitcher. Calling myself Mission Control, everyone. So this is Ken at Mission Control. So Danny is our next pitcher. He is one of the co-founders and the CMO, if I am not mistaken, from FixMe. So Danny, if you get your screen and you're ready to go ahead and share your screen and take it away.
Hi, everyone. How's it going? This is Danny from FixMe. I'm the CMO and co-founder of FixMe. So basically, we are a mobile technology platform that simplifies the auto body shop repair process. So basically, instead of going to the shop, we bring the shop to you. So this is based on personal experience. I was looking to get my car fixed, and I was looking for the body shop, and I didn't know who to trust. What is the actual price for the repair? And how long is it gonna take? So I ended up finding someone that can do this work mobily. And basically we designed the company based on that service, and we wanna offer that service to everyone. So we are on-demand body shop. Will have the work done at the repair done at the location, on the driveway, at home, or at the office. So it's a same day repair. The customer, with his busy schedule and all, gets set up the appointment, and we come to them and get the work done. So, and since we have no brick and mortar cost, our prices are typically about 50% lower than a typical body shop. So over the time, we have mastered the pricing and mastered scheduling, and we are on the road to hit the big market. So the market assessment here, it's about 33,000. This is back in 2015. It's growing about a 5% to 10% rate annually. There's 13.5 million crashes a year. So just getting, and these are the recorded crashes with insurance companies and police. There's a lot more that basically is our niche market that are not reported to the insurance: scratches, dings, dents. Basically, these are our main category of customers. And we are competing with the big four of body shops that they only have 12% market share. So this is a big opportunity for us to get part of this market share. Okay, and in numbers, this is how we're doing so far. So basically, we started end of 2015 with the concept. We did some trial runs, Q1 and Q2, to see how the market reacts to this product that we're offering. And it seems like as soon as we launched our first campaign, we got a lot of interested customers. They love the service that we're providing. It's something that's unique. It's done very fast, and no need to go rent a car, drop your car at the body shop. We'll go there, have it done. And the pricing, of course, the customers love our pricing and the quality of the service. So basically, it's we're looking between Q3 2016 and Q2 of 2017. We were building the technology, getting it up for scaling, and we've done that with basically very little money from our founders' investments. So we stabilized the company by Q2 2017, meaning we're in the profitable range. We're hovering around profitability, and we started the scaling up in Q3 2017. And as soon as we add the more technicians that we have on the field, the more jobs we can do and the more profitable we're going to get. We actually crossed the 1,000 repair just recently. I believe last month we crossed the 1,000 repair. We didn't even notice that we crossed that milestone, but preparing this presentation, I saw that. And our revenue per sale is about 525. It fluctuated over time due to focus on the mobile part of the business rather than taking a bigger jobs that we have done with a network of our body shops. This is the team. Warren is our CEO. Unfortunately, he can't present today. And he has decades of experience in the finance. He was not one of the original co-founders. He was brought into the team to help us raise funds now that we're ready for it. Orlando and I are business partners for the last 6 years. We successfully and we currently have 2 businesses with over 50 employees. Salim is our guru, our technician, like our full stack engineer that has created the platform and continue to work on getting the best technology for our customers. So basically now he's working on a streamlined process where the customer comes into our website and submitting pictures and detail of the accident, and it will automatically generate a quote. And this quote will be basically 99% accurate with no changes to that. So we are very proud of our data that we have got so far and our pricing capabilities right now. The company is actually self-sufficient, and it's automatically basically driving itself. All we need to do is get more technicians and build more markets that we'll go over in the next few minutes. Satisfaction. Our customers are super satisfied. We have over 80 Yelp reviews here in Los Angeles only, with a five-star rating all over. And this is what we care about the most, because our reputation goes first. We need to always maintain a high quality service. This is our model basically. So here are the markets for expansions. Right now we are in Los Angeles, San Diego, and Phoenix. We service those 3 areas, and we're looking into going over in the next year to go over those 15 markets displayed in blue. So we're looking into going into the hotter weather with less rainy days, big population, so we can increase our markets there. And then we have multiple ideas for the northern part of the US. And unfortunately, he's not here to answer questions, but I can do it go ahead and answer those questions for Warren. And I'm gonna leave here the contact info for Warren for any other information. We are actually looking to raise 300,000 of straight equity of FixMe. So feel free to contact Warren for any other information.
Hey there, Danny. Before Al pops in, Al, I'm just going to let you know I sent you a prompt to start your video once more, but you have a request from the YouTube live chat. So they had a question asking, is FixMe covered by insurance? I know you've been making some inroads with insurance. I just want to make sure you underline that for your current raise.
Yes, that's correct. We have worked with multiple insurance companies, naming big names, Geico and AAA. We have done work for them. We have a very, very solid plan to work, and because when it makes sense, when it's a win-win situation for the customer, us, and the insurance company, this is when you know you have a good, solid business plan. And yes, we are already working with De La Hoya. It's a small insurance company with over, I believe it's around 30 to 40,000 customers. And so we are the DRP. So basically, they send us jobs, and we're looking into growing to the bigger companies where we are the DRP contact. So basically, anything that it's under $1,500 work, we can do it for half the price, and the customer doesn't even, in some cases, doesn't even need to pay their deductible. Mm-hmm.
Very good. What's the cost per unit? So to get, obviously to go into a market, you need a vehicle that's fully equipped with all the tools and so on. So what's the cost of that unit?
That's a very good question, actually. I'm surprised we don't have it in the presentation, but the cost per unit is actually pretty low because we have a partnership with PPG. PPG is the main paint distributor in the US, so in the top quality paint. So basically, once we start a new unit, we have all the paint supplies that are based on, basically they come for free as long as we purchase the product. Now the product which is the paint, is not directly a cost to FixMe. It's a cost to the technician that's part of our network. So in reality, it's a matter of getting a van set up and getting the technician right in place with all the material that it's needed. And mostly the technicians that join us have over 20 years experience. So they're fed up working with the shops from 8 to 9. We offer a more flexible schedule, and they're earning more than what they do in the body shop. So
are these going to be, are these independent technicians, or are they actually employees?
They are independent technicians, yes.
So it is kind of an Uber model of technicians in a way. The only difference is you're providing the vehicle and we
provide the vehicle in order to get a technician started, and the payment, the technician will pay back the van from the jobs that he's doing over time, over a 6 month period. So this is basically our way of starting a new unit with fronting the money and making it easier for the technician to start with us, so they don't need to do the investment, and we're getting our money back over in the next 6 months.
Okay.
And
obviously, quality at the end of the day is going to matter, right? You mentioned that multiple times.
Oh yeah, of course.
How are you going to ensure that with independent technicians?
I mean, the independent technician is responsible of the quality. We do our job by filtering and going through their resumes and going through the background checks and all that. So we're ensuring with the hiring, we're already proving that the technician can be part of FixMe. So we're doing a due diligence there. And I mean, the jobs that we are doing are basically nothing mechanical to the car. It's aesthetic work. So basically scratches, dents, bumper replacement, even door replacements, hood paint, and all that can be done.
Okay. So have you considered, rather than buying the vehicle initially, to loan them the money to pay for the vehicle? You know, sort of like a McDonald's model, right, where they'll actually loan the franchisee the money to actually buy the land and the actual building.
In reality, it's kind of like the same, because we are purchasing it, but on their behalf. So basically, we continue owning the van until it's paid off. I mean, so we are advancing the money. So either way, it's kind of the same. Yeah.
Very good. Okay. Very good. Thank you.
Awesome.
All right, gentlemen. Danny, great pitch. I know that you're the CMO, and that's not usually your job, so I think that's extra impressive that you accomplished that. So I'm going to go ahead and shut off your video, and we have our last, but certainly not least pitch. We have Chris Wade with Traina. Let me go ahead and make sure. And so, Chris Wade, can you hear me, sir?
I can, yes. Can you hear me?
I sure can. You got a video prompt, and you should be on, and you have control.
Great. Thank you, Ken. And hello to all on the line. Just turn on the presentation, and we will dive right in. All right. Hi, I am Chris Wade, CEO and co-founder of Traina, a learning and development enterprise software platform. I teamed up with 3 partners and friends about a year ago to start this. 2 friends who had built a lot of software on a custom consulting basis, and a 4th partner who had been a sales guy and built a sales team at a high growth startup to about 20 people. And the common link between all of us is we are all self-improvement nuts, very driven to improve and develop ourselves. And we'd all seen from a couple different angles how inadequately companies invest in and develop their people. So we came up with the idea for Traina, a mentor in your pocket, with the mission to deliver the knowledge that every employee needs to achieve their professional goals. So this is the world we play in, world of corporate training, big market, $70 billion spent every year by companies trying to train and develop their people. And unfortunately, most of these dollars are spent very ineffectively. Main reason, because most training today has to happen in person, which is very time consuming and expensive. And about half of that money is spent on full-time personnel, and the other half spent on external trainers and vendors. And I will zoom in on the external piece here. So think sales training. And our fun fact is that there are 6,000 sales trainers in the US that run around and do boot camps in hotel conference rooms and at companies. And the big issue there is they're very expensive. They cost anywhere from $5,000 to $20,000 plus for an in-person session. They come in, do the session, best case scenario, they're very engaging. People leave the room excited, having learned a lot, but then there's no further engagement. So what does that look like for the user, the learner? Best case scenario, they join a company that does training, get a lot of data dumped on them up front, but very little continuous education when they're actually in the job and have context for what they've been taught. So that's the problem we seek to solve, make training and the investment in people and knowledge sharing within companies much more efficient, trying to replace these ineffective and expensive in-person sessions and things. We have customers doing, right now, 100-person conference calls with everyone on mute, or mandatory videos that people just click through. And ineffective today, but fortunately, we have the technology tools to improve that. So enter Traina. Our vision, way we solve that is by serving as the knowledge sharing platform within a company. And then we provide a marketplace of any external skills training you need to supplement that. Provide the skills training with the click of a button at a fraction of the cost of an in-person session. We use data science and artificial intelligence to deliver that to users on a personalized basis, depending on what stage in your career you are, what role you have, and what goals you have. And then, very importantly, we create a feedback loop to the knowledge sources so they continue to put better information into the system. We'll skim through this. It's a big market. I zoom in here on the external spend of the $70 billion. Key point is that the vast majority of these dollars are spent on those expensive in-person sessions. We're in the early days of deploying consumer-grade technology into this space, and no one has taken our approach of really empowering the existing trainers and creating that marketplace. So that's how we plan to take on the industry. Really focus on the end user first. Start with what do they need to really learn, grow, and develop? Provide that in a software platform that's as easy to engage with as social media. But just as important as the user interface for the consumer is provide a great experience for the knowledge sources so it's very easy and frictionless to upload and import knowledge into the system. So very focused on both sides of the equation. So what's the path? How are we going to do this? Step one, what we just talked about, serving as the technology platform for learning and development teams within companies and external training partners outside of companies. Step two is where it gets fun, when our knowledge sharing movement takes off and we get to the next level of building organizational knowledge within companies. Think a CEO recording a voice memo from the field. Hey, this is what I learned this week at our big customer. Or a VP of sales interviewing top performers. What worked this quarter? What didn't? And sharing with that with their whole team instantaneously. Step three is when we really blow out the marketplace and really provide every type of professional training with the click of a button. And again, at a fraction of the cost that it costs today. So that's the vision. Be the brain of your organizational knowledge, full marketplace of any external training you need, all delivered on a personalized basis. So where are we at? We launched the first full version of our platform in September. We've signed $50,000 worth of contracts in the past 2 months since. We'll zoom in on one cool big pharmaceutical company we signed. And we'll highlight them because what we're starting to see are the network effects of creating the training resources needed for an industry. Pharmaceutical company, good example. We have their training up and running. That's now a good feeder into all other pharmaceutical companies, seeing that in a few other industries as well. So we're raising money. We set out to raise $500,000. We've raised $350 so far. So we may bump that up and are looking to bump that up closer to $750,000 and would love to have you on board. Thank you. And with that, we'll hand over to Ken.
So sorry, I was on mute. Al, go ahead and take it over. Did you want to leave your contact slide up, Chris Wade, so we all know how to get a hold of you?
I did, yes. I got scared that I'd screwed something up and wasn't going through.
Don't be afraid. We got this. We'll do this together. Go ahead, Al.
There's actually two different things about your offering, right? There's the platform, which you've developed, and then there's the content that goes along with it, right?
Yep.
You mentioned a marketplace. Do you actually have are you actually building a marketplace where training content providers can actually sell their content on your platform?
Yes, exactly. Great question. So right now we have 3 sales trainers and business development consultants on the platform. So we've done full day video shoots with each of them. So they have 30 to 40 videos each on the platform ready to go. So if this afternoon you wanted to buy sales training with the click of a button, you could do so. And it's a subscription model for those trainers, right? Our goal there is to deepen their relationships with their clients, give them a technology product to sell. So where they sell subscriptions to their channel through Traina and effectively become our sales force.
So that marketplace is built right into the platform, right? The charging, you control the monetary flow, correct?
Yes, exactly.
Okay, very good. So what makes you unique to all the other platforms that are out there, right? Is it mobile? What is unique about your platform?
Yeah. Focused on the learner and user experience. No one else in the general professional learning space has taken this approach of trying to provide a marketplace of all these trainers that are out there. You're starting to see some mobile guys pop up that, like Coursera, that have made a course or something, but nothing that really empowers and deepens the relationship between the 6,000 trainers that are out there today. And definitely nothing that takes that and then pairs that with the internal knowledge needed from within your company to really tailor any training to a learner's exact role.
Okay. Is this just a video-based platform, or is it all types of media?
Nope, all types of media. So yeah, right now, if you have a PowerPoint, we've got a PowerPoint viewer, images, you can link to external content online. We love video. We think it's more personal, develops a personal relationship that a lot of people don't get within big organizations. So all forms of media.
So you have the ability for an employer to customize a training program for each employee based on their role in the organization. And then do you track results, meaning did they actually go through the content? And then is there the capability to test at different stages of the learning life cycle?
Yes, exactly. So we give feedback, who's viewed what, so you can see what people are interacting with, what's engaging, what's working, and then right now, we're very much focused on the user experience. We are not starting with heavy test functionality. You can add quiz questions and light interaction on posts now, but we view heavy testing, which a lot of software providers out there have gone as a hurdle to user engagement. We're really going for daily user engagement and no hurdle to engaging with content. We don't want users to feel like they're getting monitored and looked over their shoulder. So we incent engagement, primarily tracking how many posts have you completed, for example, versus saying you got 40% wrong. But we do have the ability to put in multiple choice questions, things like that.
So is this a licensing model, and then is it seat? Is it per educational outcome? I mean, per each class that's taking, and then what kind of a percent are you taking on the content itself? Because obviously, multiple revenue streams.
Yep. So it's we're a SaaS platform. So SaaS model, dollar per person per month, starting at $15 per person per month. We've dropped that for big enterprise clients, but that's the general model. And then, for the marketplace, for example, the sales trainers charge on top of that. So we may be $15 per user per month, and then you subscribe to one of our sales training partners for an additional $10. That goes straight to the trainer. So they're incented to scale their business via technology platform for the first time. And then, of course, anything that companies are creating themselves, there's no charge for that unless they want us to come shoot videos, do interviews, things like that.
It's like one more quick question. So which do you see is going to be the bigger revenue stream, the licensing or the actually your percent of the content?
Definitely the software licenses. We view the other stuff as kind of ancillary to help and get people using it and have a good experience. But the goal is for us to be the platform and, have other people take care of the content creation, things like that. Our model's HubSpot, if you're familiar with them. They're the marketing automation platform, and all these little side businesses have popped up on the side to actually help people use it. We view that as the template. We'll be the platform and view, if you want to start a Traina consulting business to help a company make content, you can do so. But we're focused on the software licenses.
That's interesting because you could argue that the platform is the razor, right? And the content is the blades, and that there's more money in the blades than there is in the razor. Have you really studied that? Is that a truth?
So we're early, we're just 2 months into having the platform, but you do raise a great point. We have partnered with content creators, so guys who do these video shoots. And to your point, it's a great business. Yep. As the future goes towards video, companies are going to be making more and more videos. So that's very much something we're considering bringing in-house and having for a revenue stream for ourselves.
Very good. Okay. Thank you.
Thank you.
All right, gentlemen, thank you so much. Chris, I'm going to go ahead and relieve you of needing to share your screen anymore. So, Al, if we can keep you on for just a few more minutes, I'm going to give my last little bit of a speech, and then I'd love to ask you a few questions about your experience today. That sound okay?
Very good.
All right. So I just want to say thank you to every startup that pitched today. Now begs the question, are you, one of our viewers out there, or do you know a founder who might like to live stream pitch to an audience of more than 100 plus investors on MinnoTank? We have one spot left on November 22nd to pitch to our investor network. Please visit MinnoTank.com to apply to pitch. I look forward to personally meeting you. If you're an investor looking to gain further access to the Minnow Tank community and network, please reach out to me personally at Ken, K-E-N, at MinnoTank.com. Our next Minnow Tank pitch session is November 22nd at 2 p.m. CST in 2 weeks, the day before Thanksgiving. Now, Al, let me ask you a few questions. What did you think of today, and what did you think of your first live stream pitch moderation?
So first of all, I greatly enjoyed it, right? And do you have a way of getting feedback from the investors that are watching to see, oh, I wish you would ask this question, or that would be interesting. So any of you investors out there, if there were questions you'd like to ask, I usually focus in at, because at the end of the day, you build something, it's how are you bringing it to market, right? Because you assume they know what they're doing as far as building their technology, and that'll prove itself out. But how you're getting out of market and winning that market is at the, so I tried to make those questions around that. And do they really understand what their revenue opportunities are? Because in any model, I've always found there's always revenue streams that are going untapped and that I aren't even thinking about. Like the last one, for example, I still think in his case, I really believe it's going to be on the content and creating a platform where independent and professional content providers can provide content on a platform that, so maybe you give the platform away just so you end up with a market space to actually sell that content. Sort of like, Apple, the Apple stores and things.
Or Udemy or things, larger networks. It definitely looks similar. But we'll let them, the beauty of this is they're the founders. They're the ones running the machine. So I'm sure they'll use the statistics and decide what makes the most sense going forward. I think your introduction was really great. Let me respond from the Minnow Tank side. Since this is our very first run, we're trying to be very cautious in what we're doing, but also risk-taking. So bringing on 6 startups to live pitch, as well as trying to do this. We had 4 different states, if I'm not mistaken, or 5, including including you. So 5 states all working seamlessly. And I'm very proud of this experience. It's been a wonderful experience so far. So my very last question is, Al, I'm not asking you to write a check right now, but if you were going to select one of our 6 companies, let me remind you which those 6 companies were that you were going to bet on in your investment thesis. Would you select?
You're going to put me on the spot here.
Oh, absolutely I am. So we have Designer Share with Sarah Perkins. We have WitFoo with Charles and Tim, which is cybersecurity. We have Leaf Frey from Frey for Men, which is the tech-enabled laundry detergent system. We have Oliver Ryan from Count.it. We have Danny Gowen from FixMe. And then we have Chris Wade from Traina, who we just heard from. So in your professional opinion, putting your money where your mouth is, not that I'm going to make you write a check right now, but who would you select and why?
Okay, so they all did a really good job, first of all. They all presented well. Right. It'd be great to meet, because of course it was not the founder that was presenting for
FixMe, right?
So I think that because as an investor, you're investing in the team. So being the guy who normally doesn't do that, he accounted for himself really well. So
yeah, agreed.
Definitely got
did a great job.
Across. So he did a good job. But it would still be good to see that they all have some challenges, right? They're all at different points of their. I got to admit, I was more concentrating on each one of them individually rather than keeping a scorecard in my head.
Sure.
So they're all potentially good market spaces. Mm-hmm. Count me. There's a lot of entrance into that space, but it's a huge space, and the distribution model is relatively easy to get at, I believe, and he seems to understand that. I'd still like to see the broker because I don't think the average HR person is smart enough to think of looking. Now, don't get me wrong. When I say smart enough, knowledgeable enough to look for that solution, right? Because HR people are very smart. So if any of you HR out there, please forgive me for saying that. I didn't. I hate to admit it, but I can't decide right now. I'd have to think about them longer. But to be honest with you, I think everyone was. I don't think you can miss on any of these, actually. I think they're all good opportunities. It's just, people want to invest in things they understand. And as an investor, you should also be thinking about, I'm going to give you my money, but how else can I help you be successful, right? That's not a little thing from an investor. Usually an investor, they've built their wealth up. They're really good in a space. Man, invest in a space and then help them be successful in it. So I'm going to, not to let you down, but I'm probably, I really can't say yet. I really would want to analyze them all a little better. But I would probably put a little in all 6 of them. That's probably the way I would go with it.
That's great to hear. So the beauty is you have the opportunity if you did want to do that. So all of these companies are raising capital. So just a reminder to the investors, and I didn't tell Al I was going to put him on the spot. That's just what I do. So what we're going to ask is, Al, I'm going to come back to you next week. I'm going to come back and say, okay, Al, we're going to do an interview. We're going to say what went wrong, what went well. And you're going to tell me which company you would have suggested. Or maybe you're going to write a check to everyone. I think they'll be really, really displeased if you do that. So remember, each and every company today on MinnoTank is currently raising capital. They are all doing this and looking to search for more investors in a larger network. So they all believe in the live stream pitch opportunity. And we're so excited to host everyone. So again, Al Zeisy, thank you very much. It was great to meet you. I'm going to hold you to it by getting in contact with Lane Hub, okay?
I'm definitely going to push.
Okay.
He is moving quick, though. He was at a pitch contest today in the state of Wisconsin. So he's got a lot of interest. You win that prize. He went from having a hard time raising money, not knowing anywhere to go to. Now he's a darling for a while. It'll wear off because he's still got to perform. But his brands, the brands that he's already representing, like Procter & Gamble and Kellogg's Foods and so on and so on, we're definitely well on our way with that one.
I agree. And then that's the point where you say to yourself, okay, when money is money, who is going to be the most strategic investor for me to select? And one of the beautiful things that MinnoTank would love to accomplish is meeting men like that or meeting founders like that who have opportunities. They're now the darling. You've received a star investment, maybe from a large firm, or in his case, a star investor, Steve Case from AOL. Now that you have the star investment to fill out the rest of your deal, you really can now pick and choose which investor you want to select is going to be the best strategic opportunity for you. And so a platform like MinnoTank really stands to benefit him there in the fact that you can reach out to hundreds of investors at once and say, hey, listen, all of you guys who are all deciding whether or not you want to invest, we only have $200,000 left. All hop on this call, listen to our pitch, and then decide at the end who wants to move forward, because we need to move forward ourselves. So with that, I will thank everyone who pitched today. Thank you very much, Al, yet again. We'll look forward to seeing you again on November 22nd at 2 p.m. Central. And hope you all have a great day.
I look forward to it.
Bye, guys.
Thank you all.